Dear friends, partners and clients, we are happy to share with you on a regular basis our views on the market. And today is the day, it's time. We have very volatile market since the beginning of the year. And I would like to ask our CIO, Andreas Bickel, what his opinion is to the current market environment. So as we know, we had a very bad start into the year. I think that was the worst ever recorded year for Nasdaq. S&P also is quite red, and most of the market, those emerging markets, show a very weak start, strong drop down. How would you say you see the situation? Is it a big correction, or is it even maybe an option to buy? What is the mood? What would you say? What is your view on this?
Well, as of this recording, today is Monday, we see a washout in the market and panic, especially in the US. All indices have now lost around 10% or more, like in the Russell or in the Nasdaq. Therefore, it is a question when and will this stop, and will it stop within a correction mode, /10 to 20%, or will it stop later?
And what is your view on that? I mean, do you expect a further drawdown, or do you think it's a correction which was necessary after a strong market last year?
I would say so far it was a needed correction within a bull market. However, there are a lot of threats around. The biggest one is obviously the conflict in Ukraine, Western world against Russia. If that escalates, we might see another 10 to 20%. If, however, it stabilizes on current tension levels and the washout continues today, there might be short-term for sure a bounce, and mid-term it really depends on macro, which look good, but B, on geopoliticals, which can escalate anytime. Or to put it in a nutshell, assuming that there is no escalation, I would say it's now maybe a bit too early, but it might be a buying opportunity.
Okay, understood. So aside of the geopolitics, obviously Fed is one of the most important actors on the market and very influential. This Wednesday there will be a Fed meeting. What will Fed need to deliver? What kind of information do we expect from them to be delivered to the public in order to calm down the investors?
Well, first of all, they need to stick to what they have told us in December, and they need to have a clear action plan when to raise rates. So markets expect in March. They probably need to tell us that we do continue probably in the future to raise rates because of strong growth and some concerns of inflation, but not that the intonation is on inflation. And on the second part, they need also to tell us that there will be not a quantitative tightening, there will be mid-term a stop of bond buying and especially reinvesting of bonds, but not a tightening. And if they do that, markets will calm down.
Thank you. And maybe last but not least, to mention opportunities to buy as we have a dip now, hopefully not a bigger correction. What concrete would you recommend? What kind of asset class and what kind of region or what kind of sector would you recommend to buy?
Well, as of the actual situation and correction, I would, for one of the few exceptions to my previous saying, I would recommend first to allocate to Europe, to value, and only second to the US. Also there, more value, quality, less to tech. And last but not least, if you are in the value camp, emerging markets on a global basis look very attractive.
Thank you, Andreas. On this positive note, we wish everybody a great start in the week, more quiet market for the investors, and hopefully profits in the future. You can watch our bi-weekly videos which we post on YouTube. Subscribe to the Telegram channel of Andreas Bickel, and also subscribe on our distribution list for emails where we'll be happy to share with you trade ideas and macro views. Thank you very much. Have a great week. Thank you, Andreas. Thank you.